10 years ago, in 2015, Google wrote a check for $900 million for a stake in a crazy rocket startup. Today, that investment is worth a fortune that overshadows entire corporations, and with the upcoming initial public offering of SpaceX, it could explode. We're talking about a company that not only dominates orbit, but is also turning the tech world upside down. With a valuation of $1.5 trillion and a raise of over $30 billion, this could become the biggest initial public offering of all time. As Elon Musk confirmed on X, SpaceX will go public in 2026, possibly 2027, and will issue about 2% of the company's shares, making them available for trading on the stock market. Jeff Faust confirmed this on December 13th. The chief financial officer of SpaceX has confirmed that the company is considering going public as early as next year to raise capital for Moon and Mars missions as well as for orbital data centers. Elon Musk will retain his shares and voting rights. It has several pros and cons which we'll review now. We'll also take a step back and look at the situation from a strategic perspective. Today, we'll reveal how and why Google is getting rich through SpaceX, why companies go public, and why this could be a risky stroke of genius for SpaceX. Especially with Starlink's booming Starship, the ambitious plans for gigawatt data centers in space, and automated satellite factories on the moon. We analyze Musk's streets, the breathtaking valuation curve, and how all of this is connected to the dream of Mars. My name is Serwan, and this is Mars Chronicles. Let's take off. By the way, this video is not investment advice. I'm just telling you what I found out in my research. Let's start with Google's smart bet. In January 2015, Google and Fidelity together invested $1 billion in SpaceX for 10% of the company at a valuation of $12 billion at the time. Google's share was about $900 million for 7.4%. At that time, SpaceX had just landed the first Falcon 9 booster. Starlink was just a PowerPoint idea and revenues were minimal. Today, at a valuation of $1.5 trillion, Google's share would be worth about $111 billion. A 123 times return, which alone surpasses Adobe's entire market capitalization. For comparison, Alphabet's market capitalization is $3.8 trillion. Alphabet is the parent company of Google, just so there's no misunderstanding. In the first quarter of 2025, Alphabet reported unrealized gains of $8 billion from this non-marketable equity security, which made up almost 25% of their net income. And that's with the $350 billion valuation at the end of 2024. With the initial public offering jump, the paper gain could explode by another $80 billion. That's not only financially smart, but also strategic. Google benefits from SpaceX's dominance in launches and satellites, which could boost their own projects like Project Suncatcher for space data centers. So, what's happening here is either a massive bubble or an incredible boom, maybe one followed by the other. What do you think? Write it in the comments. Let's start right away with the basics, because understanding the foundation helps explain why such a step is so monumental for SpaceX. Let's start with the question of why companies go public in the first place. Initial public offering is the moment when a private company sells shares to the public to raise capital. It is converted into a corporation that can be traded on stock exchanges like the New York Stock Exchange. The main reason is often money, massive amounts of money that can be used for expansion, paying down debt or acquisitions without the founders having to pay everything out of their own pockets. Let's take an example. A startup like Uber raised $8.1 billion through its initial public offering in 2019 to grow globally and develop technologies that they wouldn't have been able to afford otherwise. But it's not just about cash. An initial public offering creates liquidity for early investors and employees who can sell their shares without having to leave the company. That motivates top talent who are rewarded with stock options. In addition, visibility increases, the brand becomes more well-known, partnerships become easier, and the valuation is often higher because the market prices in future potential. Or you fall out of favor and the valuation drops. But as long as there's really a solid business model, that shouldn't be a problem. Because where can you grow better than in space? An initial public offering also brings a lot of obligations with it. As a result, SpaceX will have to disclose its finances and hold regular shareholder meetings. Simply put, this gives the public an unprecedented look inside SpaceX. Although they are already very open for a rocket company, shareholders also receive voting rights, which they can use at meetings. I'm sure that the voices of the investors will be heard, but how much influence they can actually have remains to be seen. Elon Musk was still strongly opposed to an initial public offering until a few weeks ago, partly out of fear that investors might care more about short-term profits than the company's big vision. Since Musk is well connected, he doesn't have much trouble finding investors for his projects, but apparently none of his friends can cover the new capital requirements. Now comes the plot twist because something has happened in the last few weeks. Suddenly, Jeff Bezos starts talking about how in the future, all data centers will be in space. Even the chief executive officer of Google, Sundar Pichai, talks in a television interview about their ambitions to move their data centers into Earth's orbit. And then, out of nowhere, this company appears on my radar. An up-and-coming startup in the field of space-based computing was founded in 2024 and is based in Redmond, United States of America, where it currently operates with a team of 12 employees. Mainly innovative deep tech engineers who specialize in developing power and cooling systems for data centers in space. Originally known as Luminorbit, the company has focused on creating cost-efficient, sustainable, and scalable orbital data centers designed to address the energy challenges of the AI revolution by harnessing unlimited solar energy and natural vacuum cooling. However, that's much more difficult than it sounds. Most of the mass of data centers in space is reserved for cooling, because you have to find a way to harness the extremely inefficient cold of space, and all of this in a closed cycle that works without water. Otherwise, you would miss the goal if you had to periodically supply liquids. A milestone was the launch of the first NVIDIA H100 chip into space in March 2025, which positioned StarCloud as a pioneer in integrating high-performance computing hardware into space and highlights partnerships with tech giants like NVIDIA. The company is planning ambitious projects, including a 5-gigawatt orbital data center with huge solar and cooling panels that measure about 4 kilometers in width and length, to demonstrate scalability and meet the growing demand for AI workloads. StarCloud is currently in the seed phase with a valuation that indicates investor interest. I like to be on the side of the underdog, and that's why I'm happy to see these ambitious young people. However, I do wonder how big their chances of success are when their competition consists of giants like Alphabet, Meta, and SpaceX, who either have a lot of cash or can raise it quickly. I see their chance in the niche, where they develop the necessary expertise and sell it to the big players instead of competing with them. Moving their suppliers into Earth's orbit makes perfect sense given the rapidly growing energy demands of data centers. Because just look at the numbers, which should take our breath away. The United States alone consumes around 4,165 terawatt hours of electricity per year, mainly driven by industry, households, and increasingly by AI-powered data centers. That's an amount that would be enough to supply a whole country like Germany several times over. The European Union uses about 3,000 terawatt hours per year. But the grids are already reaching their limits, especially due to the boom in the digital economy. Worldwide data center energy demand is surging. Currently, they consume about 448 terawatt hours per year, which already accounts for 2 to 3% of the world's electricity consumption. According to Gartner analyses, This is expected to double by 2030, driven by the AI hype, which demands computing power on an unprecedented scale. That's equivalent to the annual output of more than 100 nuclear power plants or Japan's entire electricity consumption today. This explosion puts enormous strain on terrestrial grids, causes bottlenecks, higher carbon monoxide, 2 emissions despite renewable energy, and even water shortages due to cooling. That's why the shift into space is ingenious. There, you have unlimited solar energy without grid limits, natural vacuum cooling without resource consumption, and scalability that would be impossible on Earth to meet the growing demand without putting further strain on our planet. Everyone wants to use AI, but nobody wants a data center in their neighborhood. This trip was necessary now because it's important for further understanding of the situation. Let's briefly go back to the basics. Of course, going public also has advantages that go beyond money, and that's what makes IPOs so attractive for growth companies. First, access to capital markets. After the initial public offering, you can issue more shares or place bonds without having to beg for venture capital every time, which is expensive and time-consuming. Second, credibility. As a publicly listed company, you have to report quarterly, which creates transparency and builds trust with customers and partners. Just like Tesla, which went from a niche manufacturer to a global player through its initial public offering in 2010. Third, growth spurt. The fresh capital allows for massive investments, such as in research and development or expansion, and the higher valuation makes acquisitions easier because you can pay with shares. Fourth, motivation. Employees with stock options feel like owners, which increases productivity, and founders can partially exit without losing everything. But hey, nothing is perfect, and the downsides of an initial public offering shouldn't be underestimated. They can change a company, and not always for the better. The main drawback is losing control. Suddenly you have shareholders who expect profits every quarter, and activists who want to dictate the direction, which could endanger long-term visions like Musk's master plans because investors prioritize quick returns. Second, regulatory burden. As a public company, you have to follow the rules of the Securities and Exchange Commission, disclose finances which cost time and money, and reveal sensitive information that competitors could use. Third, pressure on performance. The market punishes failures harshly and stock prices fluctuate. This can lead to short-term thinking, like with WeWork, which imploded after the failed initial public offering in 2019. Fourth, costs. The initial public offering itself eats up millions in fees for bankers, lawyers, and audits, and after that, compliance costs continue. Fifth, analysis. Every decision is analyzed. CEOs like Musk are constantly under fire, which means stress and distraction. For SpaceX in particular, that's an interesting dilemma. Why isn't an initial public offering actually so smart for them? But it makes sense here. SpaceX has been cash flow positive for years, as Musk recently emphasized on X, with periodic stock buybacks for liquidity and a valuation that grows with progress on Starship and Starlink. They don't rely on stock market money to survive. On the contrary, being private has allowed Musk to invest in risky ventures without the pressure of quarterly results. However, an initial public offering could change that. Disclosure rules expose tech secrets, shareholders want dividends over Mars missions, and focus moves from innovation to profit. Disadvantage: less flexibility for long-term goals like a multiplanetary civilization. But why does it still make sense? SpaceX is aiming for a raise of 30 to 40 billion. That would be the biggest initial public offering ever. Bigger than Saudi Aramco's 29 billion in 2019. SpaceX is aiming for a valuation of 1.5 trillion. Saudi Aramco's valuation at the initial public offering was 1.7 trillion. SpaceX trades only about 2% of its shares, allowing Musk to maintain control. Shareholders have little influence, but SpaceX gets enormous capital for scaling. So the public pressure can't become so great due to the small traded share that the vision is shaken. We'll get to that in a moment. What is all this money for? With Starlink's revenues of 7.7 in 2024 and 11.8 in 2025, with projected 15 to 16 billion in 2026, SpaceX then has resources for mega projects like space data centers, which Musk calls most significant by far. That fits with his AI vision: win the AI race to finance Mars. It increasingly seems as if Starlink, together with Starship, is just a tool to build SpaceX's true cash cow: mega data centers in space. Now let's get to SpaceX itself and why an initial public offering suddenly makes sense for this company, which has so stubbornly remained private until now. Let's put the pieces of the puzzle together based on reports and Musk's own statements. SpaceX, founded in 2002 with the ultimate goal of colonizing Mars, has grown into a giant. Over 90% of the global payload mass into space, almost 90% of the satellites in orbit, and an exponentially growing positive cash flow. Starlink had 8 million subscribers by the end of 2025, doubling every year and accounting for 58% of the revenue. From consumer internet to maritime, all the way to military comms via Starshield SpaceX. In 2026, revenue will exceed National Aeronautics and Space Administration's budget, and National Aeronautics and Space Administration will only account for about 5% of the revenue. The valuation curve shows 12 billion in 2015, 36 in 2020, 100 in 2021, 210 in 2024, and 350 by the end of 2024. And now the jump to 1,500 billion in the secondary sale before the initial public offering. That's exponential, driven by Starlink's growth from 0 customers in 2020 to 4.6 million in 2024. Starship's progress, of course. Investors like Google and Fidelity, who put in $1 billion for 10% in 2015, are now sitting on a 123-fold return. Google's 900 million would be worth 111 billion at 1.5 trillion. Musk himself made it clear on X, can't raise at 800 billion, but the valuation keeps going up. One other thing that is arguably most significant by far, and that's the plan for space-based data centers. Imagine satellites hosting AI compute, that is, computing power, with solar panels for 100 kilowatts per satellite, scalable up to 100 gigawatts per year, with a megaton output of satellites. Very low operating costs. Laser links to Starlink, and the results are beamed directly back to Earth with low latency. Why is AI so energy hungry? On Earth, it's often complicated with the power, but in space, there's sunlight around the clock, 30 times more intense, no batteries needed, and vacuum cooling with radiators. Musk says in space, energy is actually the cheapest and superior everywhere. Instead of connecting data centers with fiber optic cables to each other and to the world, which is nothing more than lasers through a fiber optic cable, the data is beamed directly through the vacuum of space by laser, which is more efficient than through a fiber optic cable. Starlink V3 satellites, set to launch in large numbers from late 2026, are the ideal foundation for this vision, because they already deliver 20 kilowatts of power and can easily be scaled up to over 100 kilowatts. By shifting the focus from huge phased array antennas for internet connections to solar arrays and radiators for AI compute. And you know what? Such an AI satellite is actually easier to build than the complex connectivity sets that power Starlink today, because there are fewer moving parts and less complicated electronics involved. Musk's plan extends even further in the long run. Imagine factories on the moon that autonomously produce AI satellites combined with mass drivers, that is, electromagnetic railguns, which catapult these satellites directly from the lunar gravity into orbit without rockets. That scales to over 100 terawatts per year of AI power and brings us a real step closer to a Kardashev Type 2 civilization, where we use the energy of an entire star to fuel our ambitions. Even if that sounds like pure sci-fi to some, but hey, at SpaceX, such dreams quickly become reality. Another possibility would be to send the satellites directly to the moon. More precisely, in the permanently shadowed craters of the moon, where there is also water that could be used to cool the data centers. This risky bet could lead SpaceX down a dangerous path or usher in a new era of expansion. Write in the comments what you think of this idea. That fits with Musk's AI race, using the gains from Psi and Tesla now at SpaceX. Data centers in space solve Earth's problems. No grid limits, unlimited cooling, direct mobile connections via direct-to-cell prompts go straight to the satellite, not through towers and cables. Faster and more efficient. You tweet with hundreds of starships that only fly every 26 months and use the data centers in between to finance the transports. If you thought Starlink was already a cash cow, then you have no idea how astronomical this business model could become. For Mars, it's not a contradiction. On the contrary, the initial public offering finances it, or rather, allows for an expansion that finances it. Musk's vision for Mars requires 1 million tons on Mars, which means 1,000 ships with tanker flights, 10,000 launches. $1 billion per launch times 1,000 is $1 trillion. Impossible? With massive capital? The initial public offering gives 30 to 40 billion raised plus Starlink's cash flow of up to 24 billion. By 2027, that finances factories, robots, and bases. AI helps Optimus and other robots build our bases on Mars and the Moon. The risks. If the AI bubble bursts, billions will be stuck in useless satellites. In such a case, the shareholders would demand a change of course. But Musk controls with two floats. He dictates. The outlook for SpaceX is breathtaking and shows how the planned initial public offering in 2026 could catapult the company to a valuation of $1.5 trillion. With a raise that breaks all records and rewrites spaceflight history. As early as 2027, we could see the first tests of data centers in orbit, which are expected to grow to gigawatt scale by 2030 and drive the AI revolution by harnessing unlimited solar energy to provide computing power that would be impossible on Earth. For Mars, this means a big boost. A faster Starship fleet funded by massive revenues from AI services could make a first settlement feasible by 2035, with autonomous factories and robots making the red planet habitable. That changes everything. SpaceX will no longer just be a rocket company, but an AI telecom giant leading humanity to the stars and catapulting us into a multi-planetary Earth. Check out the analyses from ARK Invest, who developed an open source model in cooperation with Mach 33. They estimate SpaceX's market capitalization by 2030 to be around $2.5 trillion, with an annual growth of 38% from the current valuation of $350 billion at the end of 2024. In the bull case, it could even climb to $3.1 trillion, while the bear case is at $1.7 trillion. These figures underline how SpaceX could become one of the most valuable companies in the world in the coming years, driven by Starlink, Starship, and the emerging space data centers. Before we get to the conclusion, a quick note about our shop, Planet Pioneers, where the embroidered Ad Astra collection is currently breaking all records. Use discount code MARS26 to save 15% on everything. Grab it now. If you enjoyed this SpaceX initial public offering journey, then subscribe to Mars Chronicles and leave a like. Thanks so much to all channel members and Patreon supporters. If you also want early access to our videos, you can find all the information about it below in the video description. My name is Serwan and this was Mars Chronicles. Thanks for tuning in. Per aspera ad astra.